Back on Morning Mover, sticking with the retail detail. Walmart set to report earnings tomorrow morning. Street looking for adjusted EPS of 73 cents a share. Revenue is expected to top $175.5 billion. The stock has rallied 37% over the last year and is just shy of the all-time high of 105 hit back in February. Investors will be listening to see if the impact of tariffs on Walmart's margins and customer demand. Time now for Options Corner. Joining us to take a deeper look at this chart for Walmart is Rick Ducat, lead market technician. All right, Rick, talk to us about the trends that you notice on this chart.
So you sure wouldn't think this was a chart of a consumer staple, this strong rally that Walmart's seen during the past year, while the broader sector almost unchanged. The S&P up, kind of between both of these things, but really a strong movement from this well-established, blue chip, more, staple type company here. And to highlight some of the big earnings that we've seen here this week, so Walmart's coming up. Home Depot and Target, they both didn't, perform as well here. Like Home Depot had a slight earnings miss here, but they both reaffirmed their guidance here. So it seems like things are holding up okay. Lowe's beat. They also raised guidance here. TJX Brands, they also had very strong results here. So some interesting insights into the health of perhaps this retail sector. Target maybe seems like kind of the anomaly here. If we were to look at Walmart more specifically, we can see that Walmart has filled this gap that was formed here shortly after those highs near 105 were reached. We bottomed out here during the tariff news. From there, an upward channel has been the prevailing shape here. We tested that higher area near 104. We retreated back to 100, our green line here. Remember our gap? That was the high point that we saw. It was resistance once more. Now it's become support. We can also see this has lined up with our yellow 21-day exponential moving average as well. We can see one more thing too, is that our heavy volume area comes in near about 97, and our other node here is around 104. Expected move for the end of this week here, plus minus 4.6%, 96.15, 105.45. Those line up pretty closely with the volume profile point of control and those old highs. So some areas to consider.
All right, those are some areas to consider there. Thank you, Rick. Now to take us through an example trade, we've got Tom White, senior options contributor and co-host of Fast Market. All right, Tom, what's the approach for an example trade for Walmart, especially given its outperformance year to date?
Yeah, as Rick kind of noted, some bifurcation in the retail space at this point. You've seen Target getting hammered, TJX hitting all-time highs. Well, Walmart's just a few percent off of their all-time highs, as you mentioned, from February. Implied volatility actually really muted going into this report for Walmart, only expecting about a plus or minus 4.5% move in the shares post earnings. The IV percentile rank down at 11% right now, so it's in the bottom 90th percentile of what we've seen implied volatility levels over the last 52 weeks. That has been skewed by those losses that we saw in April in the overall market. But with that in mind, I looked at a strategy that takes advantage of maybe a move higher. Maybe Walmart is the opposite of what we've seen in Target, and this takes advantage of that low implied volatility level. But it's not a pure earnings play I looked at. I looked at something with a little bit more duration. I went out to the September monthly option, so about 30 days till expiration on this one. We're going to take advantage of maybe the small pullback that we're seeing on the Target news today, where the stock's trading just below $101. We're going to buy the 100 strike call. That's got the higher delta. It reacts more like the stock. It's the bullish portion of this strategy. And then against it, because maybe the stock goes higher, but maybe it doesn't explode to the upside, we'll sell the 107 strike call against it. So a bullish $7 wide call vertical to the upside. You're going to pay roughly, if the stock opens up here just below 101, about $280 debit. That's going to be your risk, $280 per spread, which you can make about $420 if it gets above 107 at expiration over the next 30 days. You see the break even there, 102.80 to the upside. That's just over 2% above the current share price, so well within that one standard deviation move that the market's anticipating at this point. And just to get to 107, that's only about a 6% move higher. So like I said, it's almost like a grinding higher type of strategy. Now, because you're buying the vertical, you've got some flexibility as far as trade management. If you get the move you need right away, that allows you to maybe close this trade early or close a portion of it early. But taking advantage of low implied volatility for directional bias here.
All right, low implied volatility there. That's a bullish call vertical example trade there on Walmart. Thank you, Tom. Appreciate that.